This is the weekly review for the week of May 30th to June 3rd. So, looking at Euro this week, I came into the week with a bullish bias because I believe that these equal highs up here around the 1.09400 level was going to be the draw on liquidity for this week. And basically, in my Sunday preparation for last week, I was thinking that price could make the low of the week somewhere between these liquidity areas in terms of Friday low, Thursday low, or these equal lows here. And part of what I anticipated played out here with the Wednesday low of the week. But one of the things that did not play out so well was the short that I took on Monday. So price came up into this daily order block, rating previous week's high here with a SMT, and we had some displacement. So even though I had a bullish bias for the week, I felt that we could still, or this short, especially my target being this intraday liquidity here, the London equal lows, was a very low-hanging fruit target. But even if we expect the low of the week to form on Monday or Tuesday, it still makes sense to, for me at least, to take this trade because it was a beautiful mentorship setup with every aspect that I was looking for in terms of the RAID, the SMT, the displacement, all inside a high time frame PD array, right? So we took that significant liquidity of previous week's high and London high, also equal highs, with a SMT displacement, and I was just targeting this intraday low here. But that did not work out for price. We ended up just retracing into OTE, and then in London close and after London close, taking the rate high up here. Now, when I was reviewing this a couple minutes ago, I don't know what happened here that I missed this setup. This M5 setup. So I was playing this M15 setup, M15 break and market structure here with this M15 for Valley Gap and M15 breaker, which obviously did not play out. But this M5 setup at least did play out. And looking back at this, I think, I don't know, in my printout, I don't note this at all. I mean, I note the breaker, but I don't know if I saw this live or not. I don't think so, and I don't know why. But looking at this in hindsight is something I definitely would take, and I at least would have been able to get one partial off, probably below this low or maybe inside this fair value gap, because I undoubtedly would have been targeting this set of equal lows for London low, considering that we rated London high. So if I would have taken this setup, I would have at least gotten one partial off. But instead, I took two setups, and I took a 0.5% loss total. Got in at the 25% of this fair value gap, which was pretty standard, and then I also marketed in another 0.25% at the top of this fair value gap, just because I was extremely confident on this trade. And the bias, again, ended up playing out perfectly in terms of taking those equal lows and then continuing lower. I don't know why the fuck price decided to raid that high after in London close and after session and then roll over. So I really have no idea. This is just disgusting price action. I don't know how else to describe it. Because everything was here in this setup, and it failed, but the bias ended up being right. So coming into Tuesday, I didn't do anything just because mentally I was still kind of fucked up. Seeing this fall off overnight after being stopped out here yesterday. So I still came in looking for longs because I had that bullish bias. And we rated Friday's low here from last week with a decent amount of displacement. We had an M15 BMS. There was no H1 BMS. And I kind of saw this as a market maker buy model here. Not super clean because there was no like equal highs, but there was some trend line liquidity here. And just this basic formation here and here looks like a market maker buy model. But there weren't any super clean entries outside of this entry here in the fair value gap and breaker. Because what ended up happening was I saw this, price breaking structure down, and then we ended up rating this M15 high with a SMT and breaking structure here, coming back up into the fair value gap. So this looked bearish, but I just decided to stay out because mentally I wasn't at my best, and we just again ended up here reversing, now breaking structure here, M15 BMS, and now coming back into the fair value gap and targeting this trend line liquidity. Now, in terms of a setup I could have taken, would be something like this, but the reason I don't like this is because I don't know what high to put it above. If you use that high up here, you wouldn't have gotten your fill on your take profit. So Tuesday I just stayed out. It wasn't the cleanest price action, but basically coming into Wednesday, I felt that this Tuesday low was going to be the low of the week because we had that Friday raid and the nice displacement here. So coming into Wednesday is when we had another very clean setup form with these equal lows and London low being rated and having an SMT with GU. So GU rated this Tuesday low here. EU did not. We had displacement up here, classic mentorship setup. And again, I was really confident on this trade, so I ended up getting 2 entries, both risking 0.25%, so 0.5% risk total at the fair value gap and breaker. And then this one was at the 830 price because I was anticipating a Judas swing here to go back up and take out these equal highs and the London high, which was my ultimate target. But instead, we ended up rating this, I think, M15 high here. With the SMT and then falling off. And on the M5, there was an entry. But logically for me, it wouldn't make sense to take this since my bias was bullish. But there was a institutional order flow entry drill here. But again, I wasn't even considering taking this as a short. Like I saw this live, and here you have that M5 break in market structure coming down. But when I was watching this live, it's like, is this really a break in market structure here? Or is this just a violent move down to RTO the breaker and then come back up? And I felt that this was a long again because of my bullish bias coming into the week. And I felt that Tuesday could form the low of the week because of that raid break in market structure. And now here we had another bullish raid break in market structure, classic mentorship setup. But we ultimately ended up coming down and taking those equal lows that I noted. So I think both setups were fine. The short on Monday and the long on Wednesday. It wasn't that it was bad or I violated any of the rules. I think it's just that price action was not super clean this week, and ICT noted that in a tweet on this Friday, I believe. He said EU and GU were not super clean at all, and that's why he stayed away from them. But in terms of the logic, which is really the most important thing that I'm trying to figure out, I think the logic for the Wednesday long was fine. The same thing for the Monday short. It's just that for whatever reason, price action was just super shitty. That being on Monday. And then on Wednesday, I thought that this was going to be the low of the week, but it ended up coming down for this liquidity. And I mean, this makes sense that it came down here, but obviously on Wednesday, I didn't know that. And because we formed that bullish mentorship setup, that's why I thought that Tuesday was going to be the low of the week. So instead, we came back down here into this daily fair value gap, daily breaker, rating a daily low. So this Wednesday low here was a daily low, but also equal lows, and then significant displacement up, right? So in terms of the logic, it was we came into a daily order block here. We formed a SMT with GU, a high time frame SMT, up here on May 30th with the previous week high. And then we rolled over to take daily liquidity and then broke market structure up. So this still looks bullish to me. And then Thursday, there was no setups at all. It was just consolidation, run up, consolidation, run up. So there was nothing in here that I could identify. Now, Friday was non-farm payroll. ICT says not to trade. I did end up taking a trade, only because I thought something was extremely clear here for me. ICT noted in the most recent mentorship video, the 37th video, that he says on non-farm payroll weeks, he doesn't advise trading and closing all positions after New York session on Wednesday. So I made a note of that in my notebook. But the reason why I did end up taking a trade on Friday was because I saw the mentorship setup again, but just on a higher time frame. Here is that daily raid, clear displacement away from the swing low. So here's a confluence of high time frame P arrays, daily breaker, and daily fair value gap. Break in market structure, H4. Here's your breaker on H1, and here's your fair value gap confluence with that breaker on H1 and H4. So I took a long, or set a limit for a long at the regular 25% of this fair value gap here, which was also the top of the breaker. And then I just set a 30 pip stop loss because I felt that if price was going to drop 30 more pips from here, I would be wrong on my bullish bias. So pretty much I expected non-farm payroll to dip into the breaker and then shoot up here like crazy, taking out Monday high and these relative equal highs here from the Friday current high of the day and the Thursday high. And pretty much that's exactly what happened here. We just violated the breaker a little bit, and we ended up also forming a SMT with GU. So everything was looking good for me here. Came up, clear displacement, break in market structure here, of this raid, of this short-term low here. And pretty much I decided to get a compound entry at this M15 fair value gap, M5 fair value gap. There was also this M5 breaker here, and I got in here on a market, same 0.25% risk, but then I moved my stop on this longer or higher time frame trade to break even, because I felt that since we had this displacement and break in market structure, there was no need for price to come back into this H1 breaker. If it did, then we weren't going to go up for the buy side liquidity above price, especially here when the entry occurred at around 10:20ish. There was only about one more hour left in the trading day, and it's a Friday. So, if price wasn't going to take up or take off from here, then my trade idea would be wrong. And that's exactly what happened. I got stopped out on this trade, and then I got stopped out at break even on this trade. So really, I just think that it was a really sloppy week for PA. This was a super lackluster non-farm payroll. Everything was good up until this, 10 a.m. candle that closed here, or the 9 a.m. candle, I should say, that closed at 10 a.m. And then we just rolled over and consolidated in the breaker. So I think that it was just really a ugly week of price action. But yeah, the only real clean thing is that we kind of dipped down into this higher time frame liquidity down here and had displacement away from it. But there was no trade to capitalize on that yet. So going into next week, I'm still bullish in terms of taking those daily equal highs up here. But I think if we lose previous week's low, that is going to invalidate the bullishness. What we could either do is just stay inside this breaker and then move up, or come down into this H1, H4 fair value gap in this M15 breaker here, and then run up. Yeah, so that's basically my plan for this week. If we get a low time frame set up in here, I'll take it. Or if we get a low time frame set up in here, bullish setup that is, I'll take it. Honestly, if this just respects the breaker next week and then runs up, that's going to be absolutely disgusting for me. That I would have two trades that my bias was right, but price action was just so fucking unclean that it stopped me out. But yeah, so basically, as long as we hold this previous week's low, I'm thinking that we could see higher prices. Oh, also another thing to note that I forgot to note was that the Monday setup I took and the Wednesday setup here also both had comparable setups on the dollar index, but obviously they didn't play out. Just noting that for more confluence that the two setups I took on Euro had. But yeah, overall, this week for me was a very sloppy week of price action. Now I did end up taking two trades also on NASDAQ. Now in terms of the bias from last week, I was saying that I was going to come into the week with a bullish bias because of the potential market maker sell model we're in, and then this break in market structure here. And I was anticipating a return to the breaker and fair value gap before a move up. And that's exactly what happened on Tuesday of this week. We dipped into this breaker and had clear displacement up. Now, ICT also tweeted at some point to watch the high of the day up here, which formed equal highs. So he said going into the PM session he was anticipating price to run these equal highs. So I took that advice, and based on, that was in line with my bias that I formed last Sunday. And I saw, again, price trading up from this high time frame PD array confluence. And we had lunch low here. So in one of ICT's mentorship setups, he says, or mentorship videos, I should say, he said to watch the lunch low when you're bullish, because it could be rated, and the same thing if you're bearish with the lunch high. So we had that lunch low raid here, and we also had a SMT with S&P 500, and my entry was on the on the M1, because that was the first fair value gap that formed right here at the 25% level. And then I put my stop below here, and I targeted these equal highs from the morning, and then also these equal highs that formed during the AM session and during lunch. So I think this was a very, very clean trade in terms of the logic behind it. It made sense to me, unlike the EU trades that I took. Even though they made sense, they did not play out. But this was a very clean trade. And then the second trade I took was on Thursday, because we rated previous day low here, and we had a SMT with S&P 500. And then this was another M1 entry that I took. We had the break in market structure here. And now this was the ideal entry for me, but I didn't get in on that entry. I got in on this breaker here, on this fair value gap here at around the 25% level. And I placed my stop below this fair value gap low because I thought that price should not take this in order to go higher. And pretty much what I was targeting was this internal range liquidity. So I identified this as a range high and this as the range low. So we took external liquidity here, and I was targeting this internal liquidity, which was pretty much at the mean threshold of this range. Also price coming up off of a high time frame confluence of bullish PD arrays. So this trade, again, also made very clear sense to me in terms of the logic, which is, again, like the most important thing that I'm trying to figure out. Now, in terms of the bias on S&P and NASDAQ going into the week, I'm still bullish on them. ICT noted in his most recent mentorship video that he was also bullish on S&P, looking for this high here to be taken, as well as these relative equal highs into this imbalance here. So that's kind of nice that ICT has the same bias that I identified. But I think ultimately we're going to come up to take the high of the market maker buy model. But yeah, we'll see. Overall, though, I think coming into this next week, I want to make sure I focus more on indices, just because of that real sloppy price action that we had last week on Euro is kind of annoying me. So I at least want to make sure that I pay equal attention to NASDAQ and S&P this week, to be basically actively looking for setups and not just completely focused on EU, to see if NAS and S&P are or are going to give me much cleaner price action. Because so far, again, in terms of last week, the logic and the executions from the 2 trades I took on NASDAQ were pretty good, and they played out, where the Euro trades did not end up playing out. So yeah, that's basically what I'm going to be doing coming into this next week.